One market veteran Vineet Bhatnagar, Managing Director of PhillipCapital, joins us now from the sidelines of their conference HAT. Yes, you heard it right, HAT, which stands for Hospitality, Aviation and Travel. Good morning to you, Vineet. Thank you very much for joining us. First up, before I get to the details of your conference and why you chose this particular theme, I mean, I'm not surprised ahead of the holiday season, but how are you looking at the markets itself at all-time highs? Would you venture to go ahead and buy at even these levels?
I think just the broader market question that you just asked, it appears to me that from the momentum that we have seen over the last 2-3 trading sessions, there is a growing tailwind which continues to take the market higher. And I quite agree with one of your other participants that this is quite driven by the liquidity and the surge in the liquidity that we are seeing even from the domestic retail investors month on month in the mutual fund data that we see every month. Although I would also tend to agree that the markets does look fairly valued, but who's to say as to where the top is?
All right. Vineet, good morning to you. Good afternoon to you. What about earnings itself? Because even as of now, I think the estimates are not very high, although a lot of people have begun saying that perhaps the second half will look brighter. Within the gamut of the 3 industries you're hosting, that's travel, hospitality, aviation, what's the sense you're getting about how the second half could shape up? I mean, the few participants that you may have spoken to, is there a lot more optimism now on the ground?
I think there is a lot of optimism in terms of the the sectoral focus that we have for the conference today, and there are good reasons to to look at them with greater confidence and a repeated conviction that we are doing the HAT conference this year after having done it first time last year. And the data that we are seeing is really the one that is driving us to remain focused about it. One is the continued occupancy rates that we are seeing within the hotel industry across the country. There is a recent trend report that came out over the last week, which shows that it is as high as about 70 to 72%, which is a high number. Last year, it was ranging at 60, 65, and we were all a bit skeptical and cynical about whether it will continue into the next 12 months, and it did. Likewise, for the aviation industry, the passenger load factor is as high as 85 to 90%. And after the announcement of the National Civil Aviation Policy in 2016, which promises to integrate the entire ecosystem of the domestic civil aviation industry, one is looking at the profitability profile that is visible in some of the listed domestic airlines, scheduled airlines. There is a good reason to believe that it could continue in future, notwithstanding the fact that the initial gains of lower ATF fuel was the trigger for the interest having got sparked off about 12 to 18 months ago.
Okay. So what would be your favorite picks in this HAT space, hospitality, aviation and travel space? I think
the pick. In fact, a lot of players in this particular segment, Lata, happen to be unlisted stocks, because the entire competitive landscape, if I were to share with you, the hotel industry in particular has changed dramatically between 2000 and 2014. So as against 2000, when in the top 10 players, 7 of them were Indian origin, not all of them listed, of course. But in 2017, out of the top 10 hotel players, only 5 of them are Indian or Indian origin, which means the entire churn in the top spots have been taken away by some of the new entrants, and many of them are international players and international brands. The second important element that we must look at is that there is a strategic shift from an asset-heavy strategy to asset-light. So let's take the example of Royal Orchid, which started off with only few number of hotels in fewer number of cities in India. Now they have 47 hotels that are working under the brand of Royal Orchid in 33 cities. So that has all happened with such amazing speed only because they have moved to an asset-light strategy. Similar strategies are visible even with other brands. So there is a strategic shift, and the investors have to look at it a little differently, but nevertheless quite positively.
Okay. Vineet, take your point on the hospital stocks, especially the unlisted ones in the hospitality space. But you have a very interesting classification of listed stocks as well. You have growth at a reasonable price, pure growth, value quality, and dividend aristocrats, as you call them. Where is incremental value? I mean, the dividend aristocrats, HDFC Bank, ITC are pricey. Would you still go ahead and buy them? What about, say, NBFCs? They don't come in your categories. Is that justified because valuations have become crazy?
I think the valuations, as we were saying even earlier, has looked fair to perhaps even overpriced in some cases. But in the last 6 to 9 months, there is a tremendous re-rating that is happening at the mid-cap level. And I'm not restricting this comment only to the HAT sector conference that we are doing today, but there is a greater visibility of how the formal economy and the shift to a formal business model will result in higher earnings visibility for some of the mid-cap and small-cap. And that actually has resulted in some of the single stock names in these sectors to perform very well over the last 3 weeks alone. And that, I think, is driving the market with greater conviction. And I also take the point that there may not have been a tremendous change in the economic activity per se, and that could perhaps come a little later, with a lag effect, etc. But the fact that the market, equities market, are able to forecast greater visibility for formal businesses in the mid-cap and small sector is really encouraging the investors on the street.
Also, Vineet, you write in your India strategy note that stories which could see further re-rating include the likes of HDFC Bank, Bharat Forge. I mean, these are fairly well-discovered stories, and like Lata ma'am said, that, perhaps a little pricey as well. You think there's enough upside still left over here, enough upside intact?
I think it is all to do with the level of ownership that we had traditionally been seeing in some of these sectors or stocks, and what could happen even going forward. I think our imagination is obviously limited by our own experiences in life, and if we are actually sitting at a point in time in terms of the economic activity or the full unlocking of shall I dare to say how equities market will pan out, then all these stocks are clearly the ones that people would like to own, whether directly or indirectly, because we are talking about a new person or a newer segment of investors coming into the market, whether through an SIP or through an equity mutual fund or perhaps even directly. So that being the situation, I think we are looking at portfolios being constructed, perhaps for the first time for some people, and that drives the value for even names like the ones that you just took.
All right, fair point. Since you are such a FNO aficionado, Vineet, just a last question to you. How does this very contract look to you? Looks like we are going to make further all-time highs before the contract wraps up?
Yes, I would agree with you. And my confidence stems from the fact in terms of how I have seen the trading activity and the rollovers that happened in the month of August. I would reckon that we should end higher and positive for September series as well, Lata.
Oh, that's a high note on which to end this conversation, and I do hope you'll have several high notes on your conference as well. Thank you very much, Vineet Bhatnagar, for joining us.